Good morning, everyone. Nicole Blaine here from Insurance Agency Marketing Services. Just doing a quick screen and sound check. Could somebody type in the box and confirm that you can hear me and see my screen? All right, everybody, we are going to get going here a couple minutes early, but we just have housekeeping items to go through first. I'd like to thank all of you for taking time out of your day to join us to go over the newest and, to me, the most exciting addition to our fixed indexed annuity product line. My name is Nicole Blaine. I am one of the annuity sales directors here at IAMS. In today's webinar, we are going to go over Delaware Life's line of fixed indexed annuities. These annuities do provide your clients with some of the best accumulation and great income options in the industry. They are an A- rated carrier. Before we do get going, as you all probably know, we do have some housekeeping items to attend to. The most important thing that you are going to hear me say today is our phone number on the top right-hand side of your screen, and that number is 800-255-5055. Our new producer builders are for those of you who are new to us here at IAMS. These bonuses are available based on your production level in your first 180 days or 6 months of contracting with us. We do have some great levels that you can qualify at, and as you can see inside each level are some great options for you. We've got incredible business building tools, personal perks, and even some cash rewards available for you. If you would like to know where you stand toward your new producer builder, or if you'd like to have a conversation about how to hit that next level, please do not hesitate to give us a call and talk to your sales director. This is a great conversation to be having. Moving on to our builders business program, the first thing we're going to go over is our referred producer program. I can see a couple of you on this call that have taken advantage of this program. Our business on the wholesale side of the industry is similar to yours in the field. In that one of the best leads that we could ever obtain is a referral from one of our valued producers. This is why we want to make it worth your while to refer a producer to us. With that being said, when you refer a producer to us and they get contracted, we will cut you a $50 thank you check. This is just to let you know how much we value you and your referral. Now, when the real money starts coming in is as that referral starts to write business, you do receive an override on this business. We cut these checks quarterly. Our ownership team, Steve Murray, Charles Hiring, and Curtis Hawks, sign checks for thousands of dollars at a time, so it can be very lucrative for you. With that being said, if you can think of anyone that could benefit from doing business with us here at IAMS and you would be kind enough to refer them over, feel free to type their information into the question box, or you can email me at Nicole, Nicole, at imzinc.com, and I will do my best to get them recruited over and get you on your way to earning some referred producer dollars. Now, below that is our marketing reimbursement program, which is the most popular program that we do offer here at IAMS. The rough numbers on this is every 100,000 of fixed indexed annuity premium gets you $100 in your marketing reimbursement account. Why this is so popular and lucrative for our advisors is that we don't cap your account. We don't tell you when you have to cash that account in, anything of that nature. We don't tell you what vendors you have to use. Certainly, you can utilize one of our recommended vendors or our creative team to create marketing for you. But if you have a relationship out there that is working and that you've had success with, we want to help you continue that success. All we ask is that you send us a receipt for the marketing expense that you have incurred, and we'll cut you a check hopefully that same day and get that out to you to help you offset that cost. If you'd like to know how much money is in your marketing reimbursement account or have a conversation about how to utilize your marketing reimbursement dollars, give your sales director a call here at our office. We'd love to speak with you about that. Back office support. This slide is who we are at IAMS. This is the core of IAMS and how Charles founded us 36 years ago. We want to help the independent advisor work smarter, not harder. And we're going to do that with great business building tools and resources. Of course, our advanced case design assistance, life and annuity quotes. And with that, we do make that 24-hour turnaround time guarantee to you. We're going to get you those illustrations that you request within that 24 hours of your request. But in all reality, those of you that have worked with me know that, typically we're going to do all your case design while we're on the phone, and you're going to have your quotes before you and I end our call. Now, if we do get into some advanced case design where we're bringing in possibly the RIA or the life team, maybe some other stuff, it may take that full 24 hours to get all those quotes to you, but you will have all of it within that 24-hour period. Submission to commission support is handled by our new business teams. Amber Williams heads up our annuity side here. They have fantastic teams there simply to help you get commissioned quicker. We will scrub your applications for you, submit them on your behalf. We do all of the administrative tracking on those applications for you and get you updates on your case and any outstanding requirements you may have. We do this to ensure that you get commissioned as quickly as feasibly possible. We do all of this, and there are no fees for this service that we provide you. We also have top sales expertise and coaching. We do have great sales expertise here internally, a lot of experience on both sales desks on the life and annuity side, but we do have expert coaches out in the field that are external that can help you become an expert in the topic of your choice. And then we do have our paperless contracting system. We are on the SuranceBlade platform, and we can get you appointed with most all of our carriers on there. Firelight EAPS is a single sign-on at IAMSinc.com. This is the future of our business. Most of our carriers are on our Firelight EAP platform, and we continue to add carriers all the time. It's a COVID-friendly way of doing business. And some carriers will offer you extra compensation for utilizing the EAP platform. Make sure you ask your sales director before you submit a paper app if you can earn more by doing an EAP. If you haven't already tried to utilize this way of conducting business, we are happy to assist you with that and getting started on using EAPs. Now, what these do provide is it does accelerate the application process substantially. The EAP platform helps you submit business in good order the first time. It also reduces the processing time of your business and helps you get paid quicker. And as I mentioned previously, it is a single sign-on at IAMSinc.com. Creative Marketing Solutions is something that we do have here in-house. We have a team of creative graphic designers to help you and your practice. We do have a lot of turnkey items that we can impose your logo on and get it ready for you to utilize within a couple of days. Speaking of your logos, agency solutions are something that we are very good at here at IAMS. If you haven't created a full customized brand for you and your agency, I'd tell you to do so. This is going to help you with name recognition. It's going to help you grow that natural market very organically, and we can help you with getting a customized brand. And what everyone is currently looking for are digital marketing solutions. We can also assist you with that. We can help you with websites, social media marketing, email marketing. Most everything on here we will happily assist you with. If anything I have said here is of interest to you, give your sales director a call when this webinar concludes and talk to them about how to access IAMS Creative. We can certainly get that ball rolling for you. I have mentioned our website several times already, and I know that there is nothing better than speaking with us on the phone, but there are a lot of things that we do access throughout the day that we access on the IAMS website. If you haven't registered for our website, it is very simple to do so. So when we're done with this call, go ahead and create an account. We'd love to see you on there. There are a lot of great tools available for you to use. Our illustration tools, our forms online, product grid, product news, and industry updates are all out there available to you. Retirement Analyzer is a holistic software that helps your clients understand where they are at with their current financial situation as compared to where they're going to be if they utilize your recommendations. It is a great closing tool for you. It will show your clients in a very easy to understand format how much closer they will be to hitting their financial goals because of implementing your products and strategies. Marcus Solar here in our office can get you signed up with a 30-day free trial if you'd like to take a closer look at what this software can do for you. I am going to launch my first poll question of the day now. I do appreciate everyone's participation. Would you like more information on IAMS Wealth Management? If you click yes, you will receive an automated email and receive a call from Duncan Smith to speak to you about who IAMS Wealth is and what they can do for you. We founded IAMS Wealth about 3 to 4 years ago now, and what we've done is grow this division of IAMS very organically. We've helped advisors become IRAs and pass the Series 65 at a very successful clip. Once we have you registered, we will bring great value to your practice. We do have incredibly competitive fee structures for both you and your clientele. We have great technology and a great investment platform. This has been a major growth sector in our business, and assets under management could be a major growth sector for you and your business as well. I do appreciate everyone's participation. I'm going to close out that poll, move on and launch my back-to-back poll questions. I apologize. Would you like more information on our upcoming Life and Annuity Academy? Again, if you could answer the question quickly, yes or no, I would greatly appreciate it. So we are going to be hosting our next Life and Annuity Academy in Des Moines, Iowa, June 15th through the 17th. These are 2-day trainings, and they are an excellent opportunity for our agents who are looking for new ways to grow their business. These events are created as an opportunity for you as an independent agent to meet with peers in your field. We do bring in our top agents, and they do go over the marketing strategies that they've used throughout the course of their career to get from the bottom to the top. We have some of our lead vendors there, usually running promos during the academy. It's just a great opportunity if you are active in the life and annuity space. If you are interested, go ahead and get registered. I would highly recommend that you do so. So we are on Facebook and LinkedIn. We put a lot of great stuff on our social media platforms. So go out there and give us a like on Facebook and connect with us on LinkedIn. All right, so today's agenda, here we go. We are going to go over who Delaware Life is, their product suite, their indexing strategies, their limited distribution, the support that they provide, their wholesale distribution model, the tools, and then we are going to have some disclosures that we do have to go through at the end of the webinar. Who is Delaware Life? They are the old Sun Life. That changed in August of 2013. They are a U.S.-owned, U.S.-based organization. All of their employees are in the United States, except they do have a couple still over in Ireland from the old Sun Life days. So occasionally you will call in and get someone with an Irish accent. They are part of Group 1001. They own a couple of different insurance organizations as well. This is beneficial because they share services amongst these, like maybe an investment team, legal, or HR, and this helps Delaware as an organization keep their costs down. And when they keep their costs down, you will see those cost savings go into their products. So Delaware Life, like I said, is the old Sun Life. They are AM Best rated A minus. They have held that outlook for 6 years, but are pushing very hard to get to the A rating at some point. Unfortunately, those rating agencies, as you know, don't move very quickly to bump carriers up, but they are working on that goal and are executing their financial plans to get them to an A, which will be, of course, a big game changer for them. They are not a small organization. Once again, they are the old Sun Life, so they started into the business without a product for sale with about 30 or so billion dollars. To date, they have sold $16 billion under the Delaware Life umbrella, which is about $2 billion a year on average. That's across 3 different channels. They have their independent channel, which IMOs fall under. They have their broker-dealer channel, which is smaller, and then they have their bank channel as well. So without any advertising and without any significant expenses as far as marketing, they've been an organization that has been able to be very successful based off of old-fashioned referrals, word of mouth within the industry, keeping selective partners. To date, they have $43 billion, and Delaware Life has $16 billion of business sold. Delaware's main focus products are going to be the retirement stages 7 and the target growth that we are really going to highlight today. But they do have their target income as well. Here's a quick view of the uptick over the years. 1.4 billion in 2014, which was all in MIGA business. They entered into the indexed annuity space in 2015, which has been very successful for them. You can see the trajectory of growth. Each year they've gone up a little bit. 2018 and 2020 were big years for Delaware Life, and now they've kind of leveled out. They never are going to be an Athene or Allianz. They don't want to be that huge organization. They don't want to sell $16 billion worth of annuities a year. They want to keep it in a certain range to allow them to price and invest accordingly. That is their goal for the industry. Delaware Life is not looking to take over the annuity industry by any means. So here is a look at their product suites. They have the retirement stages 7, the retirement chapters 10, the target growth 10, and the target income 10. We are predominantly today going to focus on the retirement stages 7 and the target growth 10. Their first main product, which is going to be one of the primary 2 focus products for agents, is their 7-year accumulation play. This product has been around since 2015, so they are coming up on their first batch batch of contracts that are coming out of surrender. It's been their most successful product. It's very easy to understand, and you're going to see that the design throughout all of their products. They offer simple, straightforward, easy to understand products. This makes it easy for your clients to grasp how they're built, and in turn makes it a lot easier for you to sell. This is a 7-year surrender window. Built into the product free of charge is an enhanced minimum surrender value. Really, what that is a fancy way of saying this product is guaranteed to get 1% growth on the surrender value, and that's compounded. So at the end of 7 years, if for some reason the surrender value has not increased at all, so they saw zero return on the indexes that they selected, the client would still get a 1% growth return when they surrender the policy. The only rider available to add on this policy is the return of premium rider. It's 40 basis points each year for the 7 years, and it's calculated on the account value on the anniversary date. It guarantees the worst case scenario for your client, that they never leave without the premium that they put into the contract, I'm sorry. So if you have a client who's on the fence about the product, it's a rider that they can add. They do see very low usage of it. However, it is talked about a lot and they get a lot of questions on it, but probably under 10 to 15% of the contracts actually utilize this return of premium rider. But if a client should utilize it, they can exercise that rider at any point, which is different than most carriers that make you wait at least 2 or 3 years before you can utilize the return of premium. The return of premium rider does have to be purchased with the contract. It can't be added on later. Also built into their products when we get into the rate sheet is their bailout endorsement. One of the things that they pride themselves on is their rates, and that does make them a huge contender in the annuity space. You will see it when we get into their rate sheet and their renewal rates. Some carriers have products that look pretty strong with huge, great rates up front that are hedged for about 2 or 3 years of a 7-year contract. And then once the client gets into year 4 or 5, they drop those caps down to 1.5% or 2%. And the client gets the gains all up front. We do have marketing pieces that advertise their renewals, and they advertise it as much as possible. In this product are diverse indices. One other aspect is that it's universal amongst this product and all the Delaware products is the flexible premium that they have. So as you can see, pretty standard options. Issue age is 18 to 80. They take qualified, non-qualified IRA, SEP, and Roth. Minimum premium on the retirement stage of 7 only is $10,000. But take a look at that minimum additional annual premium of $500. So they will allow a client to only contribute $500 a year. I do not think we have a carrier in our fixed indexed annuity product line that will accept only $500 a year, and they will do ACH out of the client's account on a monthly basis, quarterly basis, semi-annual basis, or an annual basis. Nice surrender charge starting at 8.5 and reducing. They can take 10% free withdrawal on this contract after the first year. And then we already talked about the enhanced minimum guaranteed surrender value. So that's 1%. They do have the return of premium rider, which is 40 basis points. Market value adjustment does apply on these products, and then the death benefit is the greater of the accumulation value or the minimum guaranteed surrender value. They do also have the nursing home and terminal illness riders. Now, what I would like you to take a look at is the compensation schedules that they offer. So, option 1 is the upfront option. 7-year contract pays 5% upfront. But option 3, take a look at option 3 on your screen here under client issue ages 0 to 74. Delaware Life offers a 1% first year commission with a 1% trail for as long, oops, I went too far, for as long as your client keeps their contract. So what that means is that if your client keeps that contract for 20 years, you're going to get 1% each year for 20 years. That's huge. As you can see, they have some great cap and par rates. Their First Trust Index has a 90% participation rate. This is a tech-heavy value fund. They have an 85% participation rate on the Morgan Stanley, which is their momentum-based fund. They built these proprietary indexes out in these products to complement each other and to complement the S&P. So Morgan is a global option with US, European, and Japanese commodities and investments. And First Trust is a US-based, but more heavy in the tech sector in the NASDAQ. And then, of course, the S&P, which everyone knows. They have their S&P cap on their 7-year product right now at 5.15. That is highly, highly competitive right now on a 7-year product. They also have the S&P option of the 1-year trigger. And what that is simply a bet that you are making that the S&P is going to go up for the year. If it does, you get 4.35%. If it goes up 10%, you still get 4.35. But if the S&P does go up, you're betting that it is going to go up, and if it does go up, you get a 4.35 yield, whether it's 1% or 10%. So what is it that you're guessing it's going to go up for the year, and you still do get that 4.35? There are 5 indexes to diversify in. All of these indexes are 1 year, so you can reallocate on an annual basis. So one thing to think about when you're talking to clients who are looking at MYGAs, this account has a 2.15 fixed account. So we've got 5-year MYGAs now, a little bit above 3%. So rather than go into a MYGA, see if they're willing to go an additional 2 years to get a much higher yield. So the bailout endorsement on this product does allow for a full or partial withdrawal from the contract without surrender charge or market value adjustment if the renewal cap for the S&P 1-year point-to-point strategy is below the bailout cap rate. No allocation to the index is required to receive the bailout protection. And this benefit is provided to the owner at no additional cost. So you can see option 1, bailout triggered, option 2, bailout not triggered, option 3, bailout triggered, and option 1, there's 2 option 1s and 2 option 2s, I'm sorry. So it's showing you that when the bailout is triggered and when the bailout is not triggered. Okay, next product that we are going to go over is Delaware Life's Target Growth 10. This product was launched in June of 2020. It is a 10-year surrender charge schedule. There are multiple commission options available, and then it does have a 2-tier rate structure, which we'll get into. The guaranteed minimum account value guarantees the account value will not be less than at least 110% of the initial premium. That's huge. Less any withdrawals. So at the 10th anniversary, and then in California, it's 109%. They do have several diverse index crediting strategies on the Target Growth 10, which we'll also get into. Same kind of standard specs on the product. Issue ages 18 to 80. They take non-qualified IRA, SEP IRA, and Roth IRA. Minimum premium on this product is $25,000. Okay, so it's not 10 like the retirement stage is 7. The minimum premium on it is $25,000, so a little higher than most minimum premiums. But again, on this product, it is a flexible premium product, and they will take that $500 minimum additional premium each year, and they will withdraw it from the client's bank account. They can send the premium in however they'd like to do it. They have their standard 10-year declining withdrawal charge schedule. California has its own special schedule, as we all know. Free withdrawals, they can take 10% of the most recent contract anniversary account value in the first year, or their RMD, whichever is greater. The guaranteed minimum account value guarantees that the account value will never be less than 110% of their initial premium. That's 110% of initial premium. They do have that bailout option for full or partial withdrawals without surrender or MVA. This product does have market value adjustment. Death benefit is greater of the account value or the minimum guaranteed surrender value, and it does have the nursing home and terminal illness waiver. Okay, so let's look at the commission grid again for client issue ages 0 to 74. So we've got a 10-year contract that pays 7% up front. However, if you choose the one with the 1% trail, you're going to get 10% commission. If the client keeps the contract 15 years, you're going to get 15% commission. So it's entirely up to you. You know, if you're trying to build a business with continual income, that trail option is very, very attractive, and it might be of interest to you. And I'm happy to get you out any information you might want on that. Okay, so let's take a look at the interest crediting strategies. So these are the rates effective 3/1. I forgot to change that, but I did update the rate yesterday because they had a rate increase, and that should say 4/1. I'm sorry. Rates increase again April 1st. So the S&P cap, they do have banded rates. So less than $100,000 of premium is 4.75 with a 30% par. Over $100,000 of premium, you've got a 5.25 S&P cap with a 33% par. Take a look at that fixed account. Over 100,000, you've got 2.15% on your fixed account. Less than 100, 1.95. The Morgan Stanley Global Opportunities Index, which we went over, 90% participation. So you are going to get 90% of whatever that index does on premium less than 100,000, and then you've got 95% of it. So the house is only keeping 5% of that earning on the Morgan Stanley index. Same thing holds true with that first trust index that they offer. 90% on premium less than 100,000, 95% over 100,000. And then the RBA Select Equity Yield Index has a 75% spread, 0.75% spread on premium less than 100,000. Over 100,000, house is only going to keep 0.25%. So really, really great opportunities there. These products are designed to yield, let's say, between 3 and 6%. So let's say your client goes all in with that RBA index of 100% allocated to it. And let's say it yields 5%, your client's going to see a 4.75 yield. So you go 50 in that and 50 in that RBA or in that fixed account, your client's going to be at about a 4% yield as opposed, or I'm sorry, a 5% yield as opposed to if they were in a multi-year guaranteed annuity. These rates are incredible, and these indexes and with the renewal rates, these products cannot be beat, in my opinion. I am so happy to have Delaware as a part of our annuity platform now. So the retirement chapters 10, we're just going to touch on this one briefly. It's another 10-year product. This is their bonus product that they offer. So it offers a 5% premium bonus on all first-year premiums. It has multiple commission options, just like the other products. This one launched in May of 2015. It does have the First Trust Barclays Index, S&P indexes, and the fixed account on it. You can see the rates are competitive. They have the 1-year point-to-point par with the First Trust Barclays at 70%. They do have a momentum allocator 5.5 volatility control index on a 1 and 2-year chassis with a 55 and 72% par rate. This index is through Deutsche Bank, and they do quite well. They have the S&P cap is average 3.5% on a bonus product. You know, when you get a bonus product, you get lower cap and par rates, and that's just how bonus products work because they are fronting the interest up front when they give you the bonus. The fixed account on this contract is 1.5%. Issue ages 21 to 80. Same product specs, 25 minimum. I did not go over maximum premium so that just like everybody else, if you have over $1 million of premium, we do have to get company approval prior to submission. And then they do allow for $500 additional premium annually, 10-year declining withdrawal schedule, free withdrawals, so they can take 10% out after the first year. 100% of the premium less any withdrawals is the minimum guaranteed value. MVA is applied to this contract. The death benefit is the greater of the account value or the minimum guaranteed surrender value. Commission structure on this product, 7% upfront or 2.5 with a 0.5 trail for issue ages 0 to 74. They also have their Target Income 10 product. This product has a 5% benefit-based bonus on premiums received in the first year and has a 7% roll-up. The rider fee on this product is 1.05%. This product has been a nice balance for Delaware because it is very simple to explain. Client puts $100,000 in, $100,000 in, has a $105,000 benefit base, and then starts getting 7% roll up. So after 10 years, that benefit base is now $175,000. Now, what's nice about this product is that it steps up on a daily basis. So let's say client was planning on turning income on in year 10, but year 5.5 rolls around, or 6, or year 3.5, whatever, and they can't wait till the contract anniversary, because this contract steps up on a daily basis, they are not going to get just that standard payout for their, say they're 65. They're not going to get that payout percent. They're going to get 65 plus however many months and days they are old, if that makes sense. I can show it to you on illustration software. This is also a product that you can turn the rider off on, and if at some point client decides that they don't want the rider anymore, they can just simply cancel it, and it then becomes just a straight accumulation product. This product is very flexible, not only from a premium standpoint, but you can change the rider from single to joint if something happens in your life and you need either joint income or single income. And then you can also cancel the rider or stop the rider if you want to. As you can see, the rates are banded in 3 bands: less than 100, 100 to 500, and more than 100,000, or more than 500,000. The S&P cap, pretty standard on an income product. What I would like to point out is the Morgan Stanley, the RBA, and the First Trust rates. So this is an income product that is going to give you, on $100,000 of premium, 80% of what the Morgan Stanley returns. The RBA has a 1% spread, so the house is only going to keep 1% of it. And then the First Trust has an 85% par. So your client really can see some decent accumulation on this product, as well as receive an income from it. So here is the FIA suite highlights. I'm not really going to touch on much of this because we pretty much went over all of this. The target growth 10, I didn't go over this, does have annuitization available after 1 year, so client could annuitize the contract if they wanted to or needed to. Fixed index crediting strategies, we went over those. So the Barclays is a US NASDAQ based blend of US Treasury futures and equities. The Morgan Stanley is a global index, US, Germany, and Japan, and it's weighted very heavily in the tech sector. We all know what the S&P is. And then the Richard Bernstein Advisors is what RBA stands for. It's focused on the top 100 US dividend paying stocks through methodology based on leading market research and fundamental analysis of financial factors. And then it does have that 5% volatility target that it aims to hit. Okay, so distribution and support. Delaware Life is a limited distribution product. That's why you may not have heard of it. We are one of a very fortunate, select, small number of IMOs to have these products. Like I said earlier, Delaware Life is not looking to be the next Athene or Allianz. They like to have more personal relationships, I guess I'd say, with their IMOs. So far, Jay isn't on the call with me today, but so far, we've had him now for about a month and a half. Anytime I have a question, I can call Jay, get an answer within 15 minutes, or shoot him an email. You know, they are very, very, it's like working with IAMS, working with them. It's just a very, very nice relationship to have. Now, here's where the agent portal is. You can go and log in, but you do not have to log into their website to see any of the index returns, any product brochures, run any illustrations, but you do have to log in to get access to your clients' accounts. But when you do log in, it'll show you all of your clients' policy information. Now, on the Delaware website, you can run illustrations, as you can see. You can pull sales kits. You can get forms, any marketing material, rate sheets, sales resources, and performance summaries. So there's literally pages that you can click on for the Barclays, the RBA, the Morgan Stanley, that show what the monthly return is on those indexes. Now, I do have some disclosure slides that I have to go through, and with that, I'm going to launch my last poll question. Would you like a contracting kit for Delaware Life? And while I am running through these disclosure slides, if anyone does have any questions, I did cover RBA. If you still have a question on it, I will follow up with you at the conclusion of the webinar and we can go into that. But if anybody has any questions, now is the time to type them in the box and I'll address them. Otherwise, I will address them at the conclusion of this call. I do appreciate everyone's participation in my poll question. If you want the kit information for Delaware, click yes. If you don't, please click no. Anybody have any questions? We're almost done. We have 3 more disclosure slides. Does not look like anybody has any more questions. I'm going to close out my poll questions. I do appreciate everyone's attendance on my webinar today. I know it's hard for you guys to step away from your busy days, but I will follow up with each of you at the conclusion of the webinar, answer any questions you might have, and get you out any product information you might want. Thanks so much for joining me and hope you have a great rest of your week.